All right, everyone, here we are with ticker symbol JMIA, Jumia Technologies. And before we go ahead and jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Jumia is currently in a downward trend, so JMIA has a trajectory of bearish territory right now. We are currently in bearish territory below the 50-day moving average. The 50-day moving average is 1640. I'd write that down. Super important number. As long as we're below it, the bears are in control. The moment we're above it, the bulls are in control. But now, for JMIA stock, the bulls actually did reappear, and they're trying to bring this back up. So we're going to look at this a little bit more zoomed out and see how this has been in a bullish run. It reached highs here of about 1973. I'd write that down for the long term or the near coming weeks or days, because if it breaks through that, this will start to see newer highs and new resistance levels. And on the other hand, we just hit one of the lowest points that this stock reached in the bearish run, and that's 1469. I'd write that down. Super important as well, because in this bearish run, that is the lowest point, and if it breaks through that, this could be on its way to newer lows. So let's go ahead and move our support to its new location based off of the last couple of hours of the day. And then we're going to move our resistance to its new location as well. And I want us to look closely at our support and resistance and where the 50-day moving average lies, right? So it's right here at 1640, slightly below the resistance level. So if the bulls want to get back into bullish territory and pull away from where they're at in bearish territory at 1607, they need to break through resistance. By doing so, they broke through the 50-day moving average, getting back into bullish territory, and they broke through resistance of breaking through 1646, turning that into a support and pulling away from the 50-day moving average into bullish territory and gaining more control over the chart. So the bulls need to break through this resistance. They can't just hang out sideways and wait and see and probably slightly cross the 50-day moving average if it catches up to the price and so forth. For them to be able to pull away from the 50-day moving average and start to hit newer highs and new resistance levels, they need to break through this resistance, break through the 50-day moving average to get back into bullish territory, and use 1646 as support to pull away from it, getting deeper into bullish territory. So super important for the bulls to break through 1646. On the other hand, we have what the bears want. And the bears want to try to bring this down after this bullish run, getting closer to the 50-day moving average. The bears appeared and stopped the bulls from hitting newer highs, but the lowest point they reached was 1584. Super important for the bears to try to do this. That's their goal. They want to pull away from the 50-day moving average and go ahead and break away from it in a downward direction, and that is 1584. So I want every investor to pay close attention. If the bears are dominating and doing what their goal is, which is important for them, is breaking through the support of 1584, pay close attention to how this stock is reacting. How quickly is it hitting newer lows? How quickly is it actually pulling away from the 50-day moving average in a downward direction? And how it's behaving. Are the bulls even trying to reappear and bring this back up? Or are the bears dominating the chart and pulling this one down to new lows and new support levels? So our support level is 1584. Again, I want to emphasize, pay close attention to the behavior of the stock. And our resistance is 1646. And the bulls need to break through that, turn it into a support so they can start to pull away and hit newer highs and new resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.